If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Obviously, I'm a NIO investor, an enthusiast. I'm also a general market enthusiast, I would say. So we're going to be talking about some fascinating developments that are going on in regards to the EV supply chain and why the devil's really in the details when it comes to investing in this space. So it'll be a super interesting, super insightful, super useful episode. If you are new to the channel, make sure you click the subscribe button. Make sure you click the notification bell icon, the like button, and leave a comment down below whether you are returning or new. All your engagement, even sharing the video, really does go a long way in helping out the channel, helping us to reach a broader audience, and me to continue doing research to provide this content for you guys. So without further ado, let's get into today's episode. So let me start with some bombshell news. Tesla's Tao Lin revealed some interesting news about their supplier payment cycles. He revealed that they're paying their suppliers in just about 90 days. Now, here's why it's a bigger deal than it might seem in the first place. As someone who follows NIO closely, I've got to be straight with you. This underscores an issue when it comes to Chinese vehicle manufacturers. Let's look at some numbers that might make you sit up in your chair. NIO is taking almost 300 days to pay their suppliers. That's not a typo, folks. We're talking about 295 days as of the end of last year, up from 197 days in 2021. And NIO isn't alone. XPeng is sitting at 221 days, up from 179 days in 2021. Here's where it gets really interesting, and this is something that I haven't heard anyone else discuss. BMW, one of the old guards in the automotive world, is outperforming everyone, taking 30 to 45 days to pay back suppliers. Think about that. While we're focused on tech and innovation of electric vehicles, the traditional automakers, the traditional companies are teaching everyone else a lesson about supply chain, pretty much putting on a master class in how to pay suppliers back. Now let's talk about some breaking news sending shockwaves throughout the industry. BYD, a major player in the automotive world in the EV space, of course, had asked their suppliers to reduce their costs by 10% in 2025. And they're not the only ones adopting this aggressive cost-cutting strategy. SAIC Maxis had joined in on the party, launching a major cost control project. And get this, there's even a story about Geely's parts procurement manager handing a knife to the president of Bosch China. Symbolic or not, this gesture to cut through Gordian knots is pretty hard to ignore. Let's examine the troubling numbers though. In 2023, the profit margin of China's top 100 auto parts companies was sitting at just 7.2%. Worse still, companies like Lizong Group, specializing in wheel hubs and tires, reported only 3% profit margin in the first half of 2024. Here's another key insight. Accounts receivable in the automotive parts industry is skyrocketing. For A-share listed companies in this sector, 204 in total, receivables increased from over 140 billion yuan in 2020 to over 231 by 2023, a 64.57% jump, and it's still climbing, hitting over 244 billion yuan in Q3 of 2024. Let's break down some company-specific payment cycles in Q3 this year. XPeng, 274 days. Haima Motors, 205 days. Leap Motors, 198 days. Shangan Automobile, over 97 days. Great Wall, 90.3 days. And Xiaomi Motors, 89 or over 89 days. Most analysts overlook this, but payment terms aren't just about numbers on paper. Some suppliers are saying that even when payments are due, they might receive a 6-month acceptance bill instead of cash. Imagine the impact on that supplier's cash flow plan. Another insight from industry contacts is that suppliers are favoring traditional automakers, Well, why is that? Well, companies like BMW, they're not just paying faster, they're consistent and they're reliable. No delays, no games, just straightforward business relationships. Let's put on the analyst hat. Here's why it matters for your portfolio. First, these extended payment terms create risk in the Chinese EV sector. Stretching payment terms like this is like getting an interest-free loan from suppliers. But what will suppliers do? They'll adjust by factoring in higher costs and deprioritizing orders. So, if companies like BYD want to ask suppliers to cut costs, they have to be like a BMW and start making these payments on time and consistently. Second, Tesla's 90-day payment cycle isn't just a number. It's a strategic choice that's strengthening supplier relationships and maintaining healthy cash flow. Now let's talk about the innovation paradox. Here's the paradox. While Chinese EV makers may lead in tech, they risk creating innovation bottlenecks through these lengthened payment cycles. Suppliers waiting nearly a year to get paid, it causes them to have limited resources to invest in things like R&D or pursue new technologies aggressively that might be able to cut costs for all. Looking ahead, I see three scenarios here. Supplier consolidation. Smaller suppliers might get squeezed out, concentrating the supply chain, but also potentially stifling innovation. Price rebound. Suppliers might demand higher prices to offset delayed payments, eroding cost advantages. Number three is quality concerns. Financially stressed suppliers might begin to cut corners, leading to future quality issues. So what does this mean for your investment strategy? While I'm not offering financial advice, here's what I'm considering. Also focus on supplier relationships, not just delivery numbers. Pay close attention to working capital management. Watch for supplier distress in quarterly reports. And monitor quality indicators more than ever. In the EV race, we oftentimes focus on the flashy stuff, range, tech, and autonomous features. But payment terms could also reveal a different story about who the real winner in the electric vehicle race could be as well. Anyways, that's all for this episode of the Courtside Financial Podcast. I hope you found it insightful, useful, helpful, at the very least entertaining. If it was any of those things, make sure you hit the subscribe button, click the notification bell icon, share the video, join the Discord, leave a comment down below. And I think I said hit the like button already. But anyways, we'll see you in the next episode of the Courtside Financial Podcast. Thanks for tuning in. This is Obi signing off.